All right, welcome to the Noteworthy USA podcast. My name is Ben Fredericks, back with you today, and once again joined by my co-host Aaron Halderman. What's up, brother?
How's it going, man?
Good, dude. It's all going good. So excited to be back with you today. We got a great guest, which is sort of outside of the world of notes, but we think you guys are really going to enjoy it. We're super stoked to have him on. And before we get going, just wanted to make a quick announcement. We're excited to officially announce the Noteworthy National Convention that will be happening virtually September 17th through the 18th. We've got some great speakers lined up. We'll be covering state of the industry, what opportunities to expect in the coming year, which I think there's going to be some big ones, and sourcing notes, due diligence, raising private money, starting a fund, et cetera, et cetera, et cetera. So there's going to be a lot to learn, and you can get your ticket at notetools.com/virtual convention. We'll put the link in the show notes. But today we've got a great guest, and I'm going to let Aaron handle his intro. Take it away, man.
Awesome. Well, hello, everyone. Thanks for joining us. So Andrew Keene is our guest. Welcome, Andrew, to the show. How are you?
Thanks for having me on. In sunny Scottsdale, which is a little too hot for my liking, but it's all good.
Didn't it hit like 120 last week or something?
Like I said, I've been trying this golf thing, and I was hitting balls at like 2 p.m. I went through like half a bucket, and I'm like, I'm out of here. I can't do this anymore.
You'd have to bring like one of those full-on sports Gatorade mugs that they have for the teams, and just put that in the back of your cart with you.
Yeah, it's my new hobby.
And just get after it. Well, I guess you just recently celebrated your 21st birthday, right?
You should have seen these shirts that I've had. It said Happy 21. I actually got, you can't see it, but I got 41 shaved into my head. That's all.
I did see that. That's impressive. So, yeah, the big 4-1. That's awesome. Well, where did you spend it? Did you stay in town, or did you go out of town?
We had a little bit of a bender in Dallas. I actually took off like the first day of my trading room since November, so that was fun. But every time I party hard, I'm like really excited to get back and I want to work again.
You know,
I'll work for like a week or two, and I'm like, okay, let's go race again. So.
That's awesome. Well, so Andrew and I, crazy enough, we met out of the country. We were both at a financial marketing conference in London, and I guess this was 2 years ago now. And we were just at a networking dinner, and we happened to sit next to each other and instantly hit it off. You know, we come from very different worlds, but have a lot in common, and just really enjoyed each other's company. I was fascinated to learn about what he was doing, you know, to generate some passive income in the trading world. So with Wall Street type investments. And then here I am, you know, Ben and I are on the opposite ends of the spectrum, you know, in notes and real estate and, you know, off Wall Street type investments. And so, but, you know, it's great to have a diversified portfolio. And so we thought, you know, you've been putting out a lot of great content in the marketplace right now, and have, you know, a good social following on Instagram and YouTube and stuff. And so, you know, we're just in kind of crazy times right now, and a lot of people are working from home. A lot of people are trying to figure out, you know, what's next, you know, step for them, or how can they get a side hustle going, or maybe got to have a restart career-wise. And so figured now would be a good time to have a few different guests on the podcast to go over what, you know, some other options for people you know, could look like. We had somebody about a month ago that was talking about, you know, different life insurance strategies. And so we're excited to have you share your knowledge as an expert. So why don't you tell everybody, you know, a little bit about yourself and your background and some of the nuggets that we'll be talking about today that they can look forward to. So again, welcome, Andrew Keene, Alpha Shark. Alpha Shark.
This is what I wear all day long. Wherever I move to a new building, I just like walk around all day like this, and I feel like I'm in a San Diego beach. Like, what do you do for a living? I'm like,
so for those of you
where do you want to start?
So those of you that are listening and not watching, Andrew's in a bright blue tank top, enjoying the 120-degree weather in Scottsdale, Arizona?
Yeah, so just the background, I graduated from college in 2001. I traded on the trading floor at the Chicago Board Options Exchange. I was a market maker. I was the largest market maker in the Apple pit. So I was down there for about a decade. And then when I left, I was trying to figure out what I wanted to do with my life. I had a very successful career. I had money. And I started a live trading room where basically people could watch and pay money to watch me trade live. I've realized over time I'm a very good trader, and I'd say a 6.5 educator. So I started the room about 9.5 years ago. And then recently I partnered with a company named Agora Financial out of Baltimore. And with their launch, we have now become the largest live trading room in the world. So we have about 3,000 paid subscribers that pay about $2,000 a year to watch me trade live. I trade a lot of different things. But that's kind of like, to be honest, I do mentoring, I run the trading room, and then I do mentoring. And that takes about 2 hours a day, and I run it about 4 days a week. So in my older age, and I have this nest egg of money, how can I make money off this? And I'm very well versed in the different, basically passive income strategies. And what do I want to do? So, I've spoken at the NoteWorthy conference about the Airbnb business model.
Yep.
I've read articles that they think Airbnb could single-handedly crash the real estate market. So I've actually tried to take out some chips on the table in the Airbnb market, but I was heavy into that. I did a little bit of investing in like strip malls with commercial real estate. So I've been on the real estate side a little bit. You obviously, Ben and Aaron, are much, much better and well-versed in that space. But I always look at it, how can I take some money and invest it to make more money? And it doesn't matter what the dollar amount is. If it's 2,000, 20,000, 50,000, 500,000, like how, compare yourself to Kevin O'Leary on Shark Tank. He says, I send out soldiers and I want them to bring home more soldiers to me. And if you're doing any kind of angel investing, you're probably going to lose money because you don't know what you're doing. Private equity as a whole loses money. VCs lose money as a whole. But, as an investor, I manage my personal portfolio. What can I do? So I have some money in a trading account. Relative to my net worth, it's not very big. Like I always say, if you want to learn how to trade, start by letting $100,000 in fire, because that's what you're going to do. Okay. So trading is really hard. It's stressful. Almost every day in the trading room, I compare trading to golf. Okay. I started this thing called golf about 6 months ago. Every time I hit the ball 4 feet to the left, do I get mad, or be like, okay, what did I do wrong? How can I improve this? And every time I talk to a customer on the phone, like, hey, how's the golf game? How's the golf game? Like, considering I started 6 months ago, great. Actually, I'm hurt. Like for 6 months, I'm really, really good where I'm happy with my progress. But in the whole scheme of things, I'm not good. So trading is very similar to that. So I think everybody should trade. Like I said, we run the largest trading room in the world. It's called the 1450 Club, but not allocate money you can't afford to lose. Airbnb was great for a while, and I had multiple properties across the United States. I was actually the investor for a CNBC show called Cash Pad, and I got producer credits, which did nothing for me. So I did some of that for a while, and then I was looking at the ATM business model.
Oh yeah.
So that's an interesting dynamic. The hardest thing about that is you'd actually have to hire a spotter to find locations, and you want to fill the machines yourself. You have a chance of getting robbed, but that's actually really good passive income. And now with brick and mortar retail kind of shutting down, not as good. But I looked heavy into the ATM business model, and you buy basically a machine for $3,000 to $5,000. Let's say you fund it with 20 grand in there. Basically, you can make upward of 30 to 40% a year in ATMs. I've obviously with coronavirus, I've decided not to get into that. But I'm always interested in learning new business models on how I can make money.
Oh, now everybody's cashless. I don't know if you've been to the Chop Shop.
Yeah,
I love that place. Great salads and bowls, but they're not accepting cash. They're all digital, Apple Pay, debit card, credit card. if they are doing cash, they're saying exact chain,
Oh, really?
exact only. And so I'm like, is this kind of the sign of the times that, is that why Bitcoin's rising? So we're kind of curious to know, like, we got a lot of people that aren't really familiar with, let's say, doing it themselves.
Yeah.
I would say a lot of people are more hands off, especially for people that are heavy into real estate and physical assets with collateral backed, that they may have some money with a financial advisor that has in a various mutual fund or diversified stock portfolio. So maybe give our listeners, like, how can they get started? Like, what are some things that they need to know or beware of if they want to really take the whole reason people really do real estate and notes is they want to take control of their retirement, and they want to use self-directed IRAs to do that, and then they also want some physical collateral. But at the same time, a lot of that stuff is building equity and not necessarily paying them good cash flow or passive income now. So some of my greatest colleagues and mentors I really look up to, they're like, man, they still trade actively in addition to their real estate portfolio. So why don't you give the listeners some color into what that looks like?
Yeah, I mean, like I said, like the 18 business model is very hands-on, and I've actually learned about something. So I'm always literally like, if I have like, let's say I have $200,000 in my bank account right now, which I do, it makes me want to throw. Like,
Yeah.
I should never have cash. Like, it makes me upset because I'm not earning interest on that. And after inflation, I'm actually losing money.
Sure.
So like, where can I put this money to work? So I've started to dive in and actually almost started a fund on it called Structured Notes. And these are available to accredited investors. I think only, I'm not sure. The biggest players in the space is Raymond James, Fidelity, TD Ameritrade does that, but they don't get really good deals. I have an account with Stifel Nicholas, and I actually have to call another one called LPL Financial. So these structured notes, and the way that it works, because I understand the derivative space very well. So the biggest banks in the world, this consists of your, actually Barclays is the biggest player in the space. So Barclays, Goldman does a little bit, Morgan, Bank of Toronto does a lot of them, will basically use the derivative market to generate income some way. They're probably selling credit put spreads. I'm not 100% sure how they do it. They have a whole quant team. Then they will issue these out to financial advisors, and the financial advisors will then issue them to accredited investors. Okay. So it's complex, but if you break it down into parts, it's very, very easy, okay? And it works like this. Let's say you put $100,000 into a structured note. So actually now I've opened so many accounts, I get emails from my people almost probably like once or twice a week, and be like, hey, Andrew, are you interested in the structured note? And I basically told them, no real estate, no European banks, no brick and mortar. Just don't even send them to me. And I want at least 10% interest on it. So what this works like this. So these banks will come up with them. And let's say you put $100,000 into the structured note. So first there'll be an expiration. Some of them are short-term, some of them are long-term. So let's say it's a 3-year expiration. Second, there'll be an interest rate paid to you, okay? It can be 10 when the market was going down a lot more, the interest was higher because volatility in options is higher. So 10 to 12% is kind of the sweet spot that I'm looking for. Then there's going to be a coupon barrier, and then there's going to be an expiration barrier. So a lot of them are 30 to 40%. I'll go over that in a second. Then you have a callable time period. So some of them, the banks can call it back on you if they want. And they're going to call it back if interest rates go any lower, which they can't really. If volatility gets sucked out of these options, they're not going to pay you as much. So the banks are actually not creating a product to take the other side of you. What they're doing is they're creating a product, taking a little bit off the top and then selling it out. So then there'll be a non-callable period. Some of them are 3 months, some of them are 6 months. So you put in 100,000. Let's say we have, let's just say for argument's sake, 10%, 3-year expiration. And let's say the index is the S&P 500 futures and the Russell. The Russell's pretty hot, so we've been doing a lot of that. And then let's say the coupon in the expiration period is 40%. And then let's say it's not callable for 6 months. So basically, they're going to pay you 10 to 12% a year. We'll use 10% in this example. 10% a year for 3 years. If the S&P or Russell goes down more than 40% in a quarter, you just won't get your interest for the quarter, which is like 2.5%. And then 3 years from today, as long as the S&P or the Russell is not down more than 40%, then you get all your money back. So it looks like this. And then let's say it's not callable for 6 months. You put in 100,000, okay? In 3 years, as long as the market's not down 40%, you'll get your $100,000 back. And you also got 10% for 3 years. So even if the market, and then once it goes down, it matches the market. So if it goes down 40%, it's not binary. So if it goes down 40%, they'll give you 60,000 of that 100. Plus you got $30,000 of interest. So basically, you lost $10,000, but the market went down 40%. Like if the market goes down 40%, we're in trouble.
That's pretty solid. I mean, considering if real estate dropped like that, we're in a 15-year recovery.
So I look at it like this. I put in like 25 to 50,000 a month in these notes. I'm like, here's the thing. I'm not that smart. I'm never going to pick the bottom. I'm never going to sell the top. I have no idea where it's going to be. I'm just going to put money in every month. And actually, if the market goes down, I'm going to get better deals on my interest. I mean, I have one. It was crazy. I have one in Tesla, just Tesla. They're paying me 38% a year. And it is callable at 80% of Tesla. This was the day before earnings they did it. So if Tesla's above 1250 in 3 months, I just basically get I get 3% per month, like 3.1% per month. So I get 10%. If Tesla stays above 1250 in the next basically 10 weeks, I get basically 10%. So they've started to do these and basically individual stocks. I had one on AT&T. I mean, that's a dividend yield. AT&T is not going to go down that much. There is one offering on Facebook, Snapchat, and LB brands, and I passed on that one because I didn't want to retail exposure. So this market is actually blowing up, and very few people knew about it. So I was actually talking about like opening a fund to basically find the deals that I like, analyze and dissect them, and then almost like sell them out. So now I'm at a point where I have 4 brokers that call me to show me deals because they know that I'm interested and I put money to work. And I look at it like this. This is great if the market doesn't go on fire. Okay, if the market goes on fire 15, 20% a year, these aren't good. These are only getting 10% a year, and they're actually going to call them back. If the market is flat, up a little bit, or down a little bit, this is the best strategy.
So this seems like a good hedge. I mean, I listen to a ton of other podcasts and, read various economic reports. I was listening to Peter Schiff the other day. I mean,
what did he tell you? Gold's going to the moon. He's trying to sell it to you?
Well, he runs Schiff Gold, obviously, so he's a little biased. But, with anybody, you take what they say and, kind of do your own research and due diligence. But it seems like this is a hedge because, rates look like they're going to go negative somehow. And the dollar is going to lose some of its value. How much? Don't know. Inflation is bound to happen. I mean, we can't have this high of unemployment and businesses still closing and, millions that have already closed and, commercial real estate not being able to, collect their rents and, unemployment is just continues to skyrocket. Now people are still going to continue to be out of jobs. So we really haven't, it's like a lagging effect that we still don't know really what's going to happen or how bad it's going to be. So it seems like this particular strategy, let's say all those factors happen, this seems like it would be a pretty decent hedge because let's just say stocks aren't going to skyrocket, over the next year. They're probably maybe flat or, decline a little bit. So it seems like this is a pretty good balanced hedge for the, seemed like it would be good. Is that kind of what you're basing the premise off of?
Yeah, I mean, like the volatility index known as the VIX is 24
Okay.
right now, which is historically really high. If we go back to 12, trust me, you're not going to get these deals on an interest rate. You're going to get 6%, 4%. But I have money in a lot of things. I have Airbnb. I have long-term rentals. I own Bitcoin. I own gold. I own silver. I have money in structured products. I trade in the market. So I always look at like my asset allocation of, and you kind of mentioned it earlier, which is great for the viewers, of like how hands-on do you want to be, right? Like the
Yeah.
more hands-on you be, the more interest, I mean, the more money you should get at it, and you're putting time and energy in it. And this is just one thing that I've looked at. And actually, my father, who was managing my money for a while, has been investing in these in 2006 and 2007. So in 2006 and 2007, when the market went down, 48% from the high, my account in my nest egg was down like 1.5 basis points, when the market's crashing. So this is, I mean, I look at the stock market every single day. I cannot figure out and fathom for the life of me how it goes up ever since we got coronavirus. And you have businesses that should fail. You should have airlines should fail. You have cruise ships should fail. I mean, United Airlines, I think, is burning $25 million a day, but you have the Fed put in there that they're going to just bail everybody out. They're just going to print trillions of dollars. If I had to think about logically what I would think, if you're in a situation when unemployment's as high as it is, the government prints $7 trillion, and there's businesses that aren't open, I would think we'd go to a recession, if not a depression.
Immediately.
I think the U.S. dollar would be worth nothing. I mean, gold is going up, and maybe it's going up because of this reason. I think gold would go up. I think Bitcoin would be through the roof. I would short with my hands explode anything I could in the stock market. But we all know the stock market in the short term is a supply demand curve between buyers and sellers. It doesn't matter. Right now, there's more buyers in the market. I mean, I was short the market on the way down. I shorted a little bit, and then I started shorting it again. And then at some point, I had to go, it doesn't matter what I think, in my opinion. All that matters is the stock market continues to go up. And, I think the next shoe to fall is the election. And I don't get political or talk about who I'm voting for, but,
Sure.
Mathematically and statistically, right now, this second, Joe Biden is a favorite. And I'm not talking about the polls. I'm talking about actually betting online. If you want to bet online, you have to lay odds for Biden to win. That's a fact. Okay, no one can deny it. And I'm not talking about the polls. And if he wins, the biggest thing is we don't know what's going to happen to corporate tax structure. And that could be the next thing. And that these companies, you have Apple overseas with billions, I don't even know, hundreds of billions of dollars, and how he's going to affect it. Because if taxes go up, I mean, I truly believe there's a possibility that in my lifetime, I might have the lowest tax bracket for myself with Donald Trump president. And in the future, if we have taxes increasing for businesses, for individual, that makes everybody's money that they have, passive income, go down. We obviously don't have a vaccine for this. We have no idea when it's going to happen. I don't think it's going to happen for at least next year. And they've done polls that said if the vaccine would come out right now, only 30% of the people would actually take it. So it's the logic of, hey, in 5 years and 10 years, do I think the stock market's going to be higher? Yeah, of course. But there could be a lot of downside very, very quickly in the next 6 months. And this is kind of a hedge against it.
So what are some, you mentioned a couple of those companies that are doing structured notes. You mentioned Raymond James, Fidelity, LPL.
Those are the biggest. So
the other one you mentioned?
Stifel Nicholas.
Okay.
I have an account there too. And it's actually funny because I called Schwab and they're like, we don't sell them. I go,
okay.
You're Charles Schwab and you don't sell them. Like I said, called basically all the online discount brokers, and a lot of them don't sell them. So I got basically connected with. So there's actually a software, and it's based out of Chicago. They've raised about $7 million. That is trying to become the Amazon for structured products. So if you're a financial advisor, you can go on their software. You can only get on if you're a financial advisor. So I can't get on, but you can get on if you're a financial advisor. And then you can basically put in a criteria field of interest, expiration, coupon barrier, expiration barrier, and then it'll come up with the structured notes that you could purchase, because these are actually like really hard to find. I mean, I've gotten like 2 or 3 buddies into these already, because it's not something that like people really know about, and it's a $50 billion industry.
So,
Like,
so people, is there a negative stigma towards these, or is there something negative in the marketplace as to why we don't know more about it, or why do you think that is?
I think the 2 things is, number one, I'm not 100% sure. I think you have to be an accredited investor. And number 2, these are very, very illiquid. So if
Okay.
you need capital, yeah. So if you need capital, okay, and there's actually a third one. If you need capital, basically, you're not gonna, like, if I'm long S&P 500 futures, I want to sell them one click of the mouse. If you actually need money and you want to take a haircut on these, they're gonna take advantage of you. So they're not that liquid, and I know I'm holding these all to the expiration unless they get called. So my money's tied up for 3 years, but I'm getting that interest. The second negative stigma about them, they are not FDIC. So Barclays is the biggest player in the game. I don't want too much money just with Barclays. In theory, if Barclays fails, okay, and they go out of business, I don't know where I'm in the debtor list, but I'm probably not that high. So like I said, this is an alternative to investing and passive income. I'm not shoving all in and taking 100% of my money in there, but having some money in there, because I don't know stuff that you can get a 10% interest, and then all the stock market has to do is not going up 40%. Sounds great. I mean, so there are going to be some negative connotation, which is liquidness, and basically the fact that if a bank fails, you would probably not get paid.
So what is, and this is very helpful, because unless notes or real estate are sold, they're illiquid as well, until you sell them. Now they're not locked up, but you got to find a buyer, right? And you may have to take a discount. So, you can kind of look at all sides of it. So talk a little bit about what you're seeing right now with the gold and silver stocks. I've been here, and then you said you're holding some Bitcoin. Talk to us a little bit about where you see things going with digital currency and Bitcoin. So take us through gold and silver stock and digital currency.
So gold and silver stocks individually are on fire. They're all 52-week highs. I can't rationally find any of them here. And they are very heavily correlated to the price of gold and silver. So if you're a gold miner and the price of gold goes up, you should make money. Just like oil companies, if you mine oil or you have a rig and oil goes up, you should be making more money. So those stocks actually not in. I've held gold, and not a lot, as 1 ounce gold coins. If you actually read the prospectus on the GLD, which is actually the biggest gold ETF in the world, they have gold somewhere. So if you wanted to go in the GLD and then actually take physical delivery on it, you can't. So when, we sold a lot of courses on cryptocurrencies and Bitcoin back in the day, and gold, what is gold worth in this world? Nothing. It's actually the number one use of gold is for Indian weddings. And does it have some productional value? Yes, but it's just what one person is willing to buy for, one person is willing to sell it for. Silver has a lot more industrial production. Copper has a lot, oil has a lot. Gold just doesn't have a lot. De Beers created a market for diamonds. Why is a diamond worth 10 grand? Because De Beers created a market.
Sure.
They're not used for anything. They can cut glass. That's all they're doing. But there's a market for it because there's a buyer and seller. So gold, I'll be long. I'll always be long. I feel like it's a hedge against U.S. currency. I could be wrong against that. I mean, sometimes when interest rates goes up, the market goes up. Sometimes when interest rates go up, the market goes down. So sometimes the correlation doesn't come into effect. So for gold, I'm long it. I think I'll always be long it. It's a very small percentage. And then, I look at Bitcoin as one of those things that, I probably have about maybe 5% of my net worth in cryptocurrencies. And I truly believe that Bitcoin is the wave of the future, and this digital currency is. Like, even on Venmo, I went out in Dallas, if I wanted to send someone over 3,000, you can't do it on Venmo. It's like you're weak. Yeah. It's crazy. And then PayPal actually takes
same with Zelly. They have
I think it's just Zelly, not Zelly.
I love calling it Zelly. My kids always make fun of me, like, Dad, why do you call it Zelly? I was like, it just sounds cool. But
Yeah, so like I truly believe like if I have a little bit of money, I told everybody, I'm like, every single person should have money in Bitcoin. 2 to 5% of your net worth. Because if Bitcoin goes from 10,000 to 100,000 or 200,000, then you're going to make a lot of money, right? I look at it as this: 60% Bitcoin chance Bitcoin goes to zero, 40% chance it goes to 50,000. And on your expected return on that, you have to put some money at work in it. So I used to go to CoinMarketCap 42 times a day to check every single coin I'm long. I don't do it anymore. But I also believe that Bitcoin is a hedge against US dollar. It's a hedge against inflation. It's a hedge against currency. Like, at what point in time in the US has never seen this before, can we stop printing money? Like, no. Let's print money. It's just like as much as we want, whenever you want. Like, I don't understand if that ever, and maybe in my lifetime will never catch up to us. Like, if you have credit card debt, if you have student loans, if you owe money on a house, you're going to go bankrupt. They're going to basically take everything you owe, right? And the U.S. government has never seen that. And it doesn't mean we can go 100 years, we can go 500 years with the United States being the powerhouse and just print as much money as they want. We don't know. I just look at Bitcoin as a reward to risk setup. It's probably the best reward to risk setup out there.
Okay. Well, this is fascinating. It's always fascinating to talk to you as an expert and hear your experience and what you're seeing in the marketplace. So we talked about the structured notes. We've gotten some of your opinions and commentary, on gold, silver, inflation, the dollar, crypto. What do you have to say right now? What are you doing as far as like trading options? What does that look like for you? And how could people get started? I know you do a trading room. Like, tell us how we could work with you.
Yeah. So like I said, I run the biggest trading room in the world, and we have mentoring before, we have the trading room, and then we have mentoring afterwards. It's available on alphashark.com. You can get it in the trading room, and it's a virtual trading room. You don't have to show up in my house, and it's through a software called Webinato or Omnovia. Basically, the screen pops up. You can listen to it. We have people that come there every day are like sad when the day is over, and we have people that show up once a week. And for basically the price of coffee a day, you can watch me trade derivatives, equity options. I talk about day trading stocks, Apple, Amazon, Baba, Facebook, Google, Netflix, Tesla, like look at my screen. And like I said, that shouldn't be like basically 100% of your net worth either. Like, take a portion and trade with it, go really small. Trading is just like scaling a business. Like, you start to scale a business, you're not going to spend $50,000 the first month on Facebook ad campaigns unless you just got a lot of VC money. You maybe start at $10 a day and you go to 20, and then as your Facebook ads make money, you scale them up. Trading is the exact same way. Start small. Trading on a SIM account, I know it doesn't sound sexy. Your friends will be like, how much SIM money did you make today? But you need to practice to get your skill level up.
Say what that is, a SIM account?
Simulated account. It's basically fake money.
Okay.
So, I mean, it's like not going to be like fun or anything like that, but that's how it is. So yeah, the website's alphashark.com. All my information's on there. Written 19 educational courses on trading.
How do people, what would you say so now let's move on from the simulation accounts, aka SIM account, to real money. What do people need to start with? 5,000, 10,000? Like you're saying, basically, if you had 100K, do 100K, and it's like, lighting on fire. Well, lighting 100K on fire to a lot of people right now is
I would say
pretty terrifying.
I would say $5,000 and not more than 5% in any position. So that's going to give you $250 of risk. Right now, I only buy calls, basically, to be completely honest. So there's calls and puts. I think the market's going to continue higher. I've been right about this for the last 3 months. I was probably wrong for a couple weeks, but I think the market's going higher. So I just look to get long in specific names, and I just buy calls. And if you start with a $5,000 account, you can start on Robinhood. Robinhood has actually been really good for my business because you can just get in there. There's no commissions, and basically you can put on a lot of my trades. You can put on for less than $100. So you can get an option for some of them are $40, $80, and you can trade from there. But $5,000 is what I would say, and not more than 5% in any individual account.
So That's helpful. What is I've heard a lot of buzz, especially in social media, about the 1450 Club. What is that?
Blowing up. Um, so I started the trading room basically 9.5 years ago with alphashark.com. The Alpha Shark and 1450 Club trading room is the same. It just basically I almost kind of licensed myself out to a bigger player.
Okay.
So they do, they handle a lot more of the customer service, all that kind of stuff like that I don't want to do as an individual.
Sure.
So I can just sit around in my tank top and golf and go to the gym. So it's
Work on
actually,
your golf game. Work on your golf game.
I'm going to go to tea time in a second. So the 1450 Club is, if you go to Alpha Shark's website, the 1450 Club is the exact same room. We combine them together.
I love it. And do you have, Andrew, what's your Instagram? Are you on Facebook? Like, how can people connect with you on social media and see all the cool activities that you're doing, so when we grow up, we can be more like you?
Instagram is Andrew Keene, just spelled like my name, _official. And it's because I can't get the blue check mark, so I didn't make my name official. And
Okay.
to be honest, I don't really do much Facebook. I do some Twitter, Keene on Market, Keene on Market. But as I've evolved and want to remove myself from the business, I've gotten off Twitter a lot. But Instagram is probably the biggest one I've been kind of pushing lately.
And you have, I think Ben had mentioned you have like an ebook or something, or a digital book or something that you want to share out. Is that the case?
I mean, if you want it, we'll give it to whoever wants for free. All you have to do, if you email Aaron's personal email and say I want Andrew's book, you get a free ebook from me.
All you have to do is text my private cell phone.
Yeah, I'll give it to you. Ready? So we can send you an ebook they can get for free. And you can put it, I don't know if you want to put it in your podcast, or wherever you want to put it, we'll give it to you guys.
We'll email it out to our subscribers. So if you haven't already subscribed, then go ahead and subscribe, and we'll send that out. Well, it's always fun to connect with you, Andrew. I love hearing what you're doing. Congratulations on all your success for hitting a new milestone. You're now officially in your 40s.
Yeah.
So, and then
actually last year I was in my 40s. When you turn 40, you're in your 40s.
Are you? Are you though? You're just kind of like
I'm closer to
you're
50. I'm closer
like
to 50,
40. 41. Now you're in your 40s. Like 40, you just like barely hit it.
I'm closer to 50 than 30. It's crazy.
That is crazy.
Yeah.
Well, and congratulations on your licensing deal, and all the success in the trading room, and it's always exciting. We wish you the best of luck in your golf game. You're going to have to work at that for the next 30 years.
Yeah.
So that's what that looks like. Ben, what else do we have? What you have anything that you wanted to connect with Andrew on?
That's it, man. I'd love to have you back on the podcast. I know we wanted just to have a quick show with you today, but I think there's a lot more that we can pick your brain on when it comes to the market and the economy going forward. So if we can pull your grace back into the show at some point in the next couple of months, that would be awesome.
Yeah, even though I lay by the pool and I'm tan and I work out, I'm actually a huge nerd. So literally one day I was let's learn about the ATM business model. Bought every book on Amazon, started doing going to YouTube and trying to figure that out. Figured it wasn't that great, and then moved on to the next one.
I love your humility followed up. I tan, I work out, I'm lazy, but then I'm just a big nerd and I study and read.
I really am. Just think about it. I've read 30 books this year.
I think that's one of the great things that we have in common is our love for our mutual admiration for education and just learning as much as possible on different subject matters. Well, man, we'll let you get to it. I know you got a tea time coming up, and so try and stay cool out there. It's going to be another hot one.
All right. Thanks for having me on.
All right. Take care, bud.